I've been a real estate investor for 17 years. I've taken policy loans to buy real estate. Primarily, I use my cash value policies for down payments. Got a lot of clients that do this as well. The beauty of using IBC for real estate is you're making money in two places at the same time. I'm going to share an illustration, and this illustration is based on 150,000 of premium going in year one. It's a 50,000 annual premium with 100,000 lump sum, 50,000 a year thereafter. We want to focus, Steve, on this column that says net cash value. This does include a dividend. This company is a 120-year-old company, never missed a single year of paying a dividend. And check this out. The cash value is always getting larger than it did the year prior. So for example, year 4 to 5, that was a $63,000 gain. We went from 312K to 375K. Year 5 to 6, we jumped from 375 to 442K. That's a $66,000 gain. We see these gains increasing right here. So always making money. Cash is accessible 30 days after a person starts a policy. So let's say this person wants to take a $300,000 loan in the 4th year. They call the insurance company, or they fill out a form, or they go into their portal and request the loan. That loan is deposited in their bank account within 3 to 5 business days. The insurance company didn't question the person what they need the money for. There's no application. There's no credit check. It's a very seamless process, and you get to pay the loans back however you want. Well, why would you use a policy to buy real estate? Why run the money through the policy? And that's what I want to share next. I'm going to pull
Yeah,
up a
why would
whiteboard.
you? I think there's some very good reasons in terms of momentums and not in terms of OPM.
That's right. So we had our cash value there of 312. So let's write that down. 312,000 in cash value. And you want to take a $300,000 loan. The key is this. When you take a policy loan, the insurance company doesn't physically remove the 300,000 from your cash value. What that means is you're still earning interest and dividends on a compound growth curve on the full 312,000. There's no lost opportunity cost here. You're still making money on the total 312. The reason this is powerful with a policy in infinite banking is because you're now making money in two places at the same time. You take the loan to buy the real estate, you hope to be profitable there. You're still earning interest and dividends on the 312,000 in cash value. This is the power, right? We call this the velocity of money. Your
Right.
dollars are doing multiple things at the same time. When someone grasps this, you'll recognize that you'll create more wealth over time. And we've done many videos about this. There are specific real estate videos. There's a crypto investment video. There's a business investment video. All these things that you can take policy loans for to create more wealth along the way. This right here is key. And you get to pay the loan back however you want. But use policy loans, funnel your money first through a policy to make money in two places at the same time.
Yeah, and we've touched on this in some other videos with regard to the rate of return and how it changes your rate of return on that piece of real estate, right? I mean, it blows up the return. I mean, since you're not using any of your own capital, generally speaking, for the down payment, that's going to make a big difference if you're going to run numbers for the project, correct?
That's correct. Yeah. Again, PM, we talked about this in another video, other people's money. You're really borrowing money from the life insurance company. You're using their cash, and they're putting a lien against your cash value, but they're letting you capitalize on earning interest and dividends on the total of $312,000 in this case. Now, policy loan rates today range between 4.5 to 6.5%, depending on the company that you go with, but you're still earning interest and dividends on that total cash.
Yeah, and it's very eloquent. And if you're a real estate investor, this shouldn't sound too weird. I'm sure Some people listening have taken equity out of a property, leveraged it in order to buy another property. So the idea of leverage is nothing new to a real estate investor, but utilizing this under the guise of guaranteed growth
Yeah,
and steady momentum, no matter what, you can't really get that leveraging a piece of real estate in terms of the guarantee.
that's right.
Great strategy for real estate investors. Thanks for sharing it, Barry. Great numbers. If you're a real estate investor, you could check in with Barry to see how this can work for you. In the meantime, feel free to comment. We're happy to respond. Appreciate the topic, Barry, and we'll look forward to seeing you all in the next video. Thanks for watching.